It happens faster than you can think. It happens faster than you can breathe. You are in a trade. You did the work. You marked the levels. The setup looked perfect. You entered with confidence, perhaps even a little arrogance. And then, out of nowhere, the market turns. A massive red candle slams against your position. It ignores your support level. It smashes through your structure. It hits your stop loss in seconds. You stare at the screen, frozen. At first, it's just shock. A hollow feeling. How did that happen? I was so sure. But then, the ultimate insult occurs. You see the price immediately reverse. It wicks your stop loss to the pip, turns around, and rockets in your original direction. The market just swept you out. It took your money, laughed in your face, and went exactly where you said it would go. But without you. And that is when the snap happens. A physical heat rises in the back of your neck. It spreads to your chest. Your jaw clenches so hard your teeth hurt. Your eyes narrow, tunneling entirely onto the P&L. You aren't thinking about market structure anymore. You aren't thinking about risk management. You aren't thinking about your long-term goals. You are thinking one thing and one thing only. I need to get that money back. Now, I need to fix this injustice. You click buy. You don't check the lot size, in fact, you double it. You want to hurt the market back. It goes against you again. You click sell. You triple the lot size. It has to go down. It can't keep going up forever. It goes up. The candles blur. The numbers on the screen stop representing money and start representing points in a video game you are losing. You enter a trance state. Click, click, click. Within 15 minutes, the silence returns. The frantic clicking stops. You have lost not just the original trade. You have lost the profits from the last 2 weeks. Maybe the last month. Maybe you have blown the entire account. You sit back in your chair, the adrenaline fading, replaced by a sick, heavy, crushing feeling in your stomach. The red mist clears, and you look at the wreckage of your financial life. You ask yourself the same question you asked last time. Why did I do that? I know better. I promised myself I wouldn't do this again. This is tilt, and it is the single greatest destroyer of wealth in the financial markets. Tilt is not just getting angry. It is a biological emergency. When you enter a state of tilt, your brain undergoes a literal chemical hijack. Your prefrontal cortex, the evolutionary masterpiece that understands logic, math, probability, and consequences, shuts down. It goes offline. Your amygdala, the primitive threat center designed to fight tigers in the jungle, takes full control. You effectively drop 40 to 50 IQ points in 10 seconds. You regress from a sophisticated human into a cornered animal. You cannot think your way out of tilt, because the part of your brain that thinks is currently disabled. The industry advice on this is usually garbage. They tell you to master your emotions. They tell you to be stoic. They tell you to take a deep breath and count to 10. That advice is useless when you are in the middle of a neurochemical hijack. You don't need breathing exercises. You need a hostage rescue team. In this video, we are going to treat tilt and revenge trading for what they really are: acute neurochemical intoxication. We are going to stop trying to control the anger and start learning how to evacuate before the bomb goes off. You cannot stop the anger from rising. That is biology. But you can stop the anger from touching the mouse. That is discipline. Chapter 1. The Justice Fallacy: Why We Seek Revenge. To stop revenge trading, we have to understand the deep psychological root of it. Why is the urge so violent? Why does it feel like a matter of life and death? It is because of the justice fallacy. Deep down, human beings are wired for fairness. From the time we are children in school, we are taught a specific equation. Effort plus correct action equals reward. If you study hard, you get an A. If you work hard, you get paid. If you are nice to people, they are nice to you. We believe in cause and effect. We believe in justice. But the market is not a human environment. It is a chaotic probability engine. It is the only place on earth where you can do everything perfectly and still be punished. When you take a loss, especially a loss that feels unfair, like a stop hunt or a news spike, your primitive brain interprets it as a theft. You feel that the market has personally insulted you. It broke the social contract. You did the work, but you didn't get the reward. And your brain screams, "This is wrong. Justice. Restore the balance." This is why we revenge trade. Look closely at your internal monologue when you are tilting. You are not trying to make a profit. You are trying to fix a mistake. You are trying to prove that you were right. We believe that if we can just make the money back right now, immediately within the next 5 minutes, then the loss didn't happen. We can erase the timeline. We can undo the theft. We can make the pain go away. This is a dangerous delusion. The market is not a person. It is not a bully. It is not a thief. It is a vending machine. Imagine you put $1 in a vending machine to get a soda. The machine malfunctions and eats your dollar. No soda comes out. What does a rational person do? They might be annoyed. They might curse under their breath. But they walk away. They know the machine is purely mechanical. It isn't out to get them. What does a tilted person do? They start punching the glass. They start shaking the machine violently. They put another $10 in, frantically pressing buttons, hoping it will pay out this time. In the end, they haven't hurt the machine. The machine doesn't care. They have only broken their own hand, looked foolish, and lost more money. You have to accept a brutal truth. There is no justice in trading. There is only math. Sometimes you do everything right and you lose. That is not unfair. That is variance. Sometimes you do everything wrong and you win. That is not skill. That is dumb luck. Revenge trading is a desperate attempt to force the market to apologize to you. But the market will never apologize. It has no voice. It has no conscience. It will only take more of your money until you stop screaming and start respecting the math. You have to let go of the need to be right. You have to let go of the need for fairness. The money you lost is gone. It has been incinerated. It is not yours anymore. It belongs to the infinite flow of the market. Chasing it is not bravery. It is vanity. And vanity is expensive. Chapter 2. The Drunk Text. Biological Incapacity. Let's dive deeper into the biology of the hijack, because understanding the mechanism is the only way to break it. When you tilt, your body floods with a specific cocktail of hormones. Cortisol, the stress hormone, and adrenaline, the fight or flight hormone. This chemical cocktail has a very specific evolutionary purpose. It is designed to help you survive a physical threat, like a tiger attack. Creates tunnel vision. Your peripheral vision literally narrows. Your hearing dampens. Your brain filters out all non-essential information. In a trade, this means you stop seeing the monthly trend. You stop seeing the daily resistance. You stop caring about next week. Your perception of time collapses. You can only see the 1-minute candle in front of your face. You can only think about now. This is why risk management vanishes instantly. Who cares about 1% risk? I need to survive this threat now. I want you to use this metaphor, and I want you to take it seriously. Trading on tilt is exactly like texting your ex while drunk. We have all been there, or we know someone who has. It's 2 a.m. You've had too much to drink. You are lonely. You are emotional. The inhibitions are gone. You pick up the phone. In that specific moment, sending that text feels like the most important thing in the world. Feels urgent. Feels necessary. Feels logical. I just need to tell her how I feel. I can fix this if I just say the right thing. Your brain convinces you that this is a good idea. The alcohol has suppressed the part of your brain that predicts consequences. You send the text, or 10 texts, or you make the call. Then you wake up the next morning. You are sober. The sun is shining. The chemical fog has lifted. You look at your phone, and you feel a wave of absolute horror. The shame is unbearable. You want to crawl into a hole. Why did I say that? What was I thinking? That morning after feeling is precisely how you feel after a revenge trading session. You look at your account balance. You look at the 20 trades you took in 1 hour, buying the top and selling the bottom. And you think, what was I thinking? The answer is you weren't. You were intoxicated. Hormones are drugs. Adrenaline is a drug. Cortisol is a toxin. When you are tilted, you are legally drunk on your own biology. Would you drive a car after drinking a bottle of whiskey? No. You would kill someone. You would lose your license. So why do you drive your trading account, your livelihood, when you are drunk on rage? You are chemically incapacitated. The moment you feel the heat rise, you must treat yourself as impaired. You are not fit to operate heavy machinery. You are not fit to manage capital. You are a danger to yourself and your finances. The drunk text rule applies here. When you are drunk, you give your keys to a friend. When you are tilted, you give your mouse to the wall. You cannot trust your own judgment in that moment, because your judgment is the very thing that is compromised. The voice in your head saying, "I can fix this, just one more trade," is the alcohol talking. It is the tilt talking. Do not listen to it. It is a liar. Chapter 3. The cost of goods sold. Professionalizing the loss. If we accept that biology works against us, how do we stop the tilt from triggering in the first place? We have to reframe the definition of a loss. Amateurs view a loss as a personal failure. I am stupid. I am bad at this. I failed. Professionals view a loss as a business expense. Imagine you run a high-end steakhouse. You are the owner. You buy 100 steaks for the weekend service. On Saturday night, during the rush, the head chef accidentally drops a perfectly good Wagyu steak on the floor. It is ruined. It cost the restaurant $50. What does the chef do? Does he fall to his knees and scream, "Why me?" Does he throw a frying pan at the wall? Does he pick the steak up, wash it off, and try to serve it to a customer to make the money back? No, that would be insanity. He picks it up. He throws it in the trash. He yells, "Fire another steak." And he gets back to work. He doesn't hesitate for a microsecond. Later, the accountant records that $50 loss as cost of goods sold, COGS. It is just an expense. You cannot run a restaurant without occasionally wasting food, breaking a glass, or spilling wine. It is part of the friction of the real world. In trading, losing trades are your cost of goods sold. You are in the business of trading risk for profit. To make profit, you must incur expenses. Stop hunts are expenses. Spread costs are expenses. Slippage is an expense. Losing streaks are expenses. If you view a losing trade as a mistake, you will get angry. You will take it personally. If you view it as an operating cost, you will be indifferent. Think about a retail store. Walmart knows that people will shoplift. They budget for it. It's called shrinkage. When someone steals a candy bar, the CEO of Walmart doesn't fly into a rage and try to fight the customer. It's just a line item on a spreadsheet. When you take a loss, say to yourself physically out loud, "This is the tuition fee I pay to the market for the privilege of trading." Or, "This is the cost of doing business today." You don't cry when you pay your electric bill. You don't tilt when you pay for your internet. These are just the costs of keeping the lights on. Why are you tilting when you pay for a stop loss? It is just a bill. Pay it and move on. The professional knows that his edge will cover the expenses over time. He doesn't pinch pennies. The amateur tries to save every penny, avoid every loss, and ends up bankrupting the business because he refuses to accept that running a business costs money. Stop trying to be perfect. Start trying to be profitable. Profitability includes losses. It requires them. Chapter 4. The Ejection Seat, the Bomb Squad Protocol. Even with the best mindset, even with the cost of goods sold reframe, sometimes the red mist will descend. You are human. The biology will kick in. When it does, you need an emergency protocol. You cannot calm down instantly. It takes the human body 20 to 30 minutes to metabolize adrenaline and cortisol. Once the bomb is armed, you cannot defuse it with positive thinking or meditation. You have to evacuate the building. I call this the Bomb Squad Protocol. It has 3 stages. Step 1. Recognition, the Geiger counter. You need to recognize the physical signs of radiation, tilt, before the explosion happens. Most traders realize they are tilted only after they have blown the account. You need to catch it during the spiral. What are your signs? Are you clenching your jaw? Are you tapping your foot aggressively? Are you holding your breath? Did you just slam the mouse down? Are you swearing at the screen? Are you staring at the P&L numbers instead of the chart structure? These are the warning sirens. The moment you notice one of these, you must assume the reactor is melting down. You are compromised. Step 2. The hard brake, the ejection seat. The most dangerous lie you tell yourself is, I'll just look for one more setup, then I'll stop. No, you are incapable of looking for a setup. You are looking for a fight. You must physically sever the connection to the market. The rule: if I take 2 losses in a row, or if I feel the heat rising, I must leave the room. Not just minimize the window, not just switch to YouTube. Leave the physical room. Stand up, walk out the door, go outside, look at the sky, do 20 push-ups. Splash freezing cold water on your face. This triggers the mammalian dive reflex, which physically lowers your heart rate. You need a pattern interrupt. You need to shock your system out of the trance. If you stay in the chair, you will trade. I guarantee it. The magnetic pull of the screen is too strong for your willpower. You have to eject from the cockpit before the plane crashes. Step 3. The lockout, the vault. If you have a history of severe revenge trading, if you are someone who has blown multiple accounts, you cannot trust your willpower at all. You need a kill switch. Most serious brokers and prop firms allow you to set a daily loss limit or a max drawdown lockout. Set it to a number that hurts but doesn't kill you, e.g. 3% of your account. If you hit that number, the software automatically locks you out of the platform until the next trading day. You will hate it in the moment. You will scream. You will want to call support to unlock it. You will feel powerless, but it will save your life. Protects you from your inner berserker. The berserker wants to burn the village down. The lockout puts the berserker in a steel cage until he calms down. Do not be too proud to use these tools. Is it better to feel restricted by a lockout or to feel devastated by a blown account? Don't be a hero. Be a survivor. Conclusion. The aftermath. If you are watching this, chances are you have already lost money to tilt. Maybe a lot of money. Maybe money you couldn't afford to lose. You probably feel shame. You probably feel stupid. You feel like you are broken. I want you to forgive yourself. You are fighting against millions of years of evolutionary programming. Your brain was designed to fight tigers and defend your tribe, not trade digital candlesticks on a screen. When you lose money, your brain thinks it is dying. It fights back. That is natural. It doesn't mean you are stupid. It means you are human. But now you know better. Now you know that tilt is a chemical lie. Now you know that revenge trading is just a drunk text to an ex. Now you know that losses are just the cost of doing business. The goal of the professional trader is not to never get angry. You will get angry. You will get frustrated. The goal is to never let the anger touch the money. You can scream. You can punch a pillow. You can go for a run until your lungs burn. But you cannot touch the mouse. Your capital is your ammunition. If you fire it all into the sky in a fit of rage today, you have nothing left for the real battle tomorrow. The market will be there tomorrow. It will offer new opportunities. It will offer fresh starts. But it can only offer them to you if you still have chips at the table. Protect your capital. Protect your peace. And when the red mist comes, eject.